Hi, in this video I am going to explain journal. Journal is a book of primary entry or original entry. All transactions are initially recorded in the journal. Let me explain with an example. Just see the problem. Purchased goods for cash. When you purchase goods, what goes out? Cash goes out, goods comes in. So what is the entry for this transaction? For any entry, for any transaction, you need to have a thorough knowledge about debit and credit. Then only you can make entries in the journal book. So for the first transaction entry is purchase account data to cash. 1st January 2000. Purchase goods. Purchase account data to cash. How much? 10,000 rupees. Journal means you have to enter the transaction both debit side as well as credit side. So based on the golden rule, you know very well about the three rules, no? Real account, nominal account and personal account. According to the golden rule only, you can make entry in the debit side as well as credit side. While you purchase any item, any goods, whether it is a goods or stationery or any asset, whatever it is, when you purchase any item, that goods comes in. When you purchase, cash goes out. So cash is a real account, no? So what is the golden rule for a real account? Debit what comes in, credit what goes out. When you purchase something, cash goes out, no? So enter credit side. What comes in? Goods comes in the way of purchase. So debit purchase, credit cash. For each and every journal entry, you have to write narration. So narration should be start with being. Being purchased goods for cash. Narration is nothing but it is details about the transaction. Every journal entry is accompanied by a narration which explains the details of the transactions which the entry is written. So this is very essential. For each and every entry you need to write the transaction details, or it is called as a narration. So first entry is over. What is the second transaction? Purchase stationery for cash. Same thing. In the previous entry, they didn't mention anything. They mentioned just purchase goods. But in this end transaction, they clearly mentioned that purchase stationery. When you purchase stationery, what comes in? Stationery comes in. What goes out? Cash goes out. Okay, just write the entry. 2nd January 2000. Stationery account data to cash. How much? 500 rupees. Again you have to write narration. Being purchase stationery for cash. Then third entry. Purchase furniture for cash. Same thing. Here they mention furniture. They have purchased furniture for cash. So when you purchase furniture, what comes in? Furniture comes in. Cash goes out. On 3rd January 2000, furniture account data to cash account. How much? 2000 rupees. Then 4th transaction, sold goods for cash. That is, you have sold some items for cash. Sales can be in two bases. One is cash basis, another one is credit basis. If they mention any name without cash, it is considered as a credit sales. But here they didn't mention any name. They have clearly given that sold goods for cash. So it is a cash sales, that is based on cash. So write the entry. What is the entry for this? Cash account data to sales. Again you have to write narration. Being sold goods for cash. How much? 1 lakh rupees. On 4th January 2000. Next entry. sold goods to James. Just see the difference. The previous entry is sold goods for cash. They didn't mention name, so it is considered as a cash sales. But in this transaction, they have mentioned the name. They didn't mention about the cash. Sold goods to James. It means it is a credit sales. They have sold some items to James. So he is a debtor. Okay, your amount is there, so you are going to get amount from James. Till you receive amount from James, he is a debtor for the company. Sold goods to James. So what is the entry? Same thing only, but instead of cash, you have to write the customer name. That is, debtor name should be mentioned in the transaction. So sold goods to James. Entry is James account debtor to sales. Just compare with the previous transaction, previous entry, cash account debtor to sales, since it is a cash sales. But this is a credit sales, no. Instead of cash, you have to write the name of the customer. James account debtor to sales, 4,000 rupees. On 5th January 2000. Again, you have to write the narration. Being sold goods to James. Then, on 6th January 2000, paid rent. Rent is an expense, no? Any expense, it's a nominal account. What is the rule for nominal account? Debit all expenses and losses, credit all incomes and gains. So when you pay rent, it is an expense. So nominal account rule is debit all expense. So enter this item under debit. Rent account debtor to cash. When you make any payment, what will happen? Cash goes out for rent. So rent is an expense. So debit expense, cash goes out, so credit cash. How much? 800 rupees. Then last entry. On 7th January 2000, paid salary of rupees 8,000. Same thing only, in the just like a previous transaction. Then it is a rent, but here salary. So salary also, it's an expense for the business, for the concern. So any expense, it's a nominal account. What is the nominal account rule? Debit all expense. So write debit. Salary account debtor to cash. So when you pay salary to your employee, what goes out? Cash goes out. So cash is a real account. What is the rule for cash real account? Debit what comes in, credit what goes out. When you pay salary, cash goes out. So credit salary. 8,000 rupees. Ledger is the second important stage in the accounting cycle or accounting process. In this stage of accounting cycle, all recorded business transactions or entries are grouped on a predetermined basis. Such classifications or grouping takes the form of accounts in a separate books known as ledger. Let us see the previous problem. First entry is purchase account debtor to cash. So in order to group or make ledger, you need to prepare first book, that is purchase account, and second one cash account. So in order to enter purchase, you need to have purchase account as well as cash account. Next entry, stationery account debtor to cash. For that you need to have stationery account and cash account. Cash account already is there, no? Again you need not open. And come to the third transaction, furniture account debtor to cash. So already we didn't have any furniture account. So you need to open furniture account. And then cash. Cash already is there. Again you need not open. Then next entry, cash account debtor to sales. Cash is already there. Sales. Sales is a new book. Then next entry, James account debtor to sales. So you need to have a separate ledger for James. Sales already there. So need not open again. Then rent account debtor to cash, no. Rent you need to have a separate account. Cash already is there. Then last entry, salary. Cash is already there. So in order to make grouping or in order to prepare ledger, you need to have a 8 ledger books separately so that you can make entry in the ledger book. So it is a very important step. So the first step in accounting process is journal. Journal means recording all the transaction, whether it is a small transaction or big transaction, whatever may be the value, you need to technically write and record all the transaction in your books of accounts in this format. First line is debit, second line is called credit balance, and after making all the transaction in a proper manner, and second important step is ledger. Ledger is nothing but separate book. For each and every transaction you need to have a separate account so that you can make entry in that particular book in order to calculate and know the total transaction which is related to that particular topic. So let us see the same problem, purchase account. So first one is purchase account. Debit side, credit side. Second one, cash account. Debit side, credit side. Third one, stationery account. Debit side, credit side. Next one, furniture account. Debit side, credit side. Next one, sales. Sales account. Debit side, credit side. Next one, James. Debit side, credit side. Next one, rent account. Debit side, credit side. Then last one, salary account. Debit side, credit side. Just listen carefully how I am going to make entries in the ledger book. See the first transaction, purchase account data to cash. You have to enter this transaction in both the accounts because we have purchase account as well as cash account. No. So you have to make entry in the purchase account as well as cash account. Just see this, purchase account data to cash. Come to purchase account, enter cash. To cash, 10,000. So you have entered cash under purchase account. No, in the same way you have to enter purchase in cash account opposite side. By purchase, 10,000. Okay, so first transaction is over. Purchase account data to cash. No, in purchase account we have entered cash, in cash account we have entered purchase, in vice versa. Then come to the second transaction, stationery account data to cash. Enter cash under stationery account and enter stationery under cash account. Let us see the first one, stationery account data to cash. No, come to stationery account. Here stationery account. Under stationery account, enter cash to cash, 500. Under cash account, enter stationery, vice versa, by stationery. How much? 500. Then third transaction, furniture account data to cash. Under furniture account you have to enter cash. Under cash account you have to enter furniture. First furniture account. Under furniture account to cash. Debit side to cash, 2,000. And under cash account opposite side by furniture, 2,000 rupees. Next journal entry, cash account data to sales. So enter sales under cash book and enter cash under sales book. So first enter the sales under cash book. Cash account data to sales. No, cash account data to sales. Debit side, 1 lakh. Now next, sales account. Sales account opposite side. Buy cash 1 lakh. Then James account data to sales. Enter sales under James account and enter James under sales account. Come to James account, enter to sales. How much? 4,000 rupees. And you have to enter the same thing under sales. Under sales account by James. Then rent account data to cash. So you have to record cash under rent account and you have to record rent under cash account. First rent account data to cash, no, come to rent account, debit side to cash 800 rupees and under cash account by rent 800 rupees. Then last journal entry, salary account data to cash. So you have to record cash under salary account and you have to record salary under cash account. So first salary account data to cash. Come to salary account, debit side to cash 8,000 and under cash account by salary 8,000. So all transaction, all journal entries are posted in ledger. Okay, now you have to balance each and every account separately. Both debit side as well as credit side you have to balance. You will get either debit balance or credit balance. Okay, according to the balance, you may get either debit side or credit side. Let us see this problem. So purchase account. Just close the purchase account. Debit side 10,000 rupees. Credit side no amount. So enter by balance, carry down 10,000. This is debit balance because debit side is more than credit side. Okay, so this amount is called debit balance. So the first balance will be written like this. Balance CD. CD means carry down. And after finding this balance carry down, you have to transfer this amount opposite side. Next, debit side to balance brought down 10,000. I told you no, you may get either debit balance or credit balance. In purchase account, in debit side you have got 10,000 rupees but credit side no amount. So debit side is more than the credit side. So you have got some balance under right hand side. So this balance will be called as debit balance. Okay. So this will be written like this. Balance carried down and you need to transfer this amount opposite side. Debit side to balance brought down 10,000 rupees. In the same way, you need to balance and close each and every account separately, both debit side as well as credit side. Now come to cash account. Cash account. Debit side 1 lakh rupee. Enter the same amount under credit side also. 1 lakh rupee. And take the total and you will get some balancing figure. Here 78,700 balancing because debit side is more than the credit side. Okay, this is a receipt, this is a payment. Out of the receipt by way of sales you have received 1 lakh rupee. Out of this receipt you have made all the payments. Okay, receipt minus payment is equal to closing balance. By balance carry down. This is debit balance. So you have to transfer this amount opposite side. To balance brought down 78,700. Next, in the same way you have to open each and every account separately. Stationery account. Debit side 500. Credit side no amount. So by balance carry down 500. Now we will get 500. Transfer this amount to next opposite side. To balance brought down 500. Furniture account 2,000. Credit side no amount. Just write 2,000 the same amount and write by balance carry down and transfer this amount opposite side. To balance brought down 2000. In the same way, sales also. 1,04,000, 1,04,000, 1,04,000. To balance carry down, enter this amount opposite side. By balance brought down 1,04,000. Then James account 4,000, credit side no amount. So by balance carry down 4,000, opposite side to balance brought down 4,000. Then rent account 800, 800, by balance carry down 800, opposite side to balance brought down 800. Debit side 8,000, credit side no amount. So by balance carry down 8,000, opposite side debit side to balance brought down 8,000. Okay, now you have closed all the account. Now you have either debit balance or credit balance. According to the transaction, you have got some balance. So purchase accounts always you will have debit balance, because purchase cash account, here you have got debit balance. Stationery account, you have got debit balance. Furniture account, you have got debit balance. Sales account, you have got credit balance, because sales is a revenue. Revenue means creditor. James, he is a debtor, so debit balance. Rent is an expense, so debit balance. Salary is an expense, so you have got debit balance. Trial balance is the third important step. First one is journal. Journal is nothing but where we used to record all the business transaction in a systematic manner. After making all the transaction in the journal, the second important step is ledger. That is grouping and classifying all the similar transactions in a separate form. And after preparing the ledger, the third step is called trial balance. Trial balance is not an account. Just summarizing all the accounts in a separate column is called trial balance. So just see the first one, purchase account. So purchase account should be recorded in trial balance. So serial number 1, purchase account. Second one, cash account. Third account, stationery account. Fourth one, furniture account. Fifth one, sales account. Sixth one, James account. Seventh one, rent account. Eighth one, salary account. Okay. Now just see, in purchase account, you have got debit balance. So purchase is always debit balance. So enter that amount under debit column, 10,000 rupees. Then cash. In cash column, this is a receipt side, this is a payment side. So in cash column, you will always have debit balance, because you are going to make payment out of receipt. So always receipt will be higher than the payment. So here you have got debit balance. So enter that amount under debit column, 78,700. Then third entry is stationery account. In stationery account, you have got debit balance 500 rupees. Stationery account, debit side 500. Then furniture account. Furniture also it's an asset. Any asset is a debit balance. To balance brought down on debit side. So furniture account 2000 debit balance. Sales. Sales it's a revenue. Revenue means income. Income always credit balance. Right hand side credit balance. You have got credit balance 1,04,000. So sales, enter that amount under credit side 1,04,000. Then James account. James account, he is a debtor because we have sold goods to James. We didn't receive any cash. We are going to get amount from James. So he is a debtor. Debtor means debit side. It is an asset. James account, enter that amount under debit side. Then rent account. So rent account also, it is a nominal account. Rent is a expense. Any expense, it's a nominal account. So debit balance. Debit all expenses, credit all incomes and gain. When you pay rent, it is a expense. So debit side. Rent account, debit balance. The next one, salary. Salary is a major expense for any organization. When you pay salary, cash goes out. It is an expense. So expense means nominal account. What is the rule for nominal account? Debit all expenses. So salary is expense, no? Debit balance. Salary account, debit side, 8,000. So all these items are recorded debit side and sales recorded under credit side. Because sales is the only revenue according to this problem. Purchase, cash balance, stationery, furniture, debtor, rent, salary, these are the debit balance. So after entering all these things, you have to take the total. In trial balance means both debit and credit must be equal. You will get the equal amount in both debit side as well as credit side. If you get any shortage or any deficit or surplus amount will be there, means you have done some mistakes in making journal or at the time of posting ledger. But basically if you didn't do any mistakes, means you will get the equal amount both debit side as well as credit side. So credit side is how much? 1,04,000. Enter that amount. And debit side, just take the total. 10,000 plus 78,700 plus 500 plus 2,000 plus 4,000 plus 800 plus 8,000. How much? 1,04,000. Trial balance always get equal amount.